All right. Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. Coming to you live at a slightly different hour than usual, but let me hold on a second here. All right. Move my green screen up a little bit there. All right, cool. And yeah, let's go take a look at the charts. It's been a crazy day. It was a travel day for me, and therefore it's really funny why I was traveling today. It's because the airline is incentivizing me to fly for no reason whatsoever, just to because it's so easy to earn a higher up status. So it's this weird free market perverse incentive where I have absolutely no reason to fly anywhere this week, but I am flying because if I fly one more time, I will become platinum silver on United. Sorry, not platinum silver. I will become a platinum status member of United. So United incentive is forcing me to fly in the middle of a pandemic, which is kind of ironic. Oh shit! I forgot to tweet this out. Give me a second, guys. And you always forget something. No. Almost stopped the stream by accident too. Shit. All right, hold on. I gotta tweet this out. Totally forgot to tweet it out. Okay, there it is. I tweeted it out. But what I was gonna say was, even though I am flying for no reason whatsoever, I do not have any symptoms, and it's a good thing that those that don't have any symptoms have a 0.7% chance of infecting anyone in their own household. So imagine the probability of walking around outside or through an airport, and this is without a mask. So there you go. So the healthy, I can never spell anything right, who are now considered to be a plague, have absolutely no ability to infect anyone, according to a new real medical study. So there you go. So they better end these fucking masks soon. That's all I'm going to say. Let's go to the charts. Got that out of the way. The month is coming to an end. We have a few days to go. Today is already December 27th. So that means we only have a few days left. And it'll be very, very interesting where the month actually ends. I know I am very curious where the month ends. And either way, no matter how this month ends, this will be an MRI top month. It's too early to tell if we already made the high for the month, and it's too early to tell if we've made the high for the next 3 months, because we could start to go down. Historically, however, even when we look at the Heikin-Ashi charts, we have had a huge candle that ended in a similar way, and that takes us all the way back to June 2016. And we had 1, 2, 3 months of consolidation, a month of breakout that did not even break the high of that month, and then we took off like a rocket into the bubble. I do see some slowdown in this move. I would love to see 28, 29,000 before New Year's sometime this year, and I would probably be taking some profit. As bullish as I am going to be realistic that it's time to take a little bit of profit. I'm kind of disappointed in GBTC, but I will be watching GBTC like a hawk at the open. Do not anticipate on me having a video stream tomorrow as the market opens. I will either do a stream before stock market opens, or I will do a stream like after 11 a.m. Eastern time, because I need to watch GBTC early in the morning as the market is opening, because I made a mistake not getting out last week. And I don't know if I'm going to get out on Monday, but I need to be in front of the market to make sure I don't make that mistake again. So that's the monthly chart. Can't wait for it to end, and then we'll see what happens. Here are the regular candles, and that is a bullish candle. That is a bullish candle, most likely setting us up for more upside. Quarterly Bitcoin chart. Yeah, we can take a look at that. Here's your quarterly chart. Oh, look at that. The quarterly chart called the last two bull markets very, very well. The quarterly MRI top came in July of 2014 at a price of $650 when the candle opened. And from that candle, we dropped fairly well all the way down 75% from the top of that candle to the low. So that was a good call. And obviously, there was a great call on the quarterly chart with the MRI on the all-time high. And now this one did not come at the beginning of the candle. This one came at the end of the candle. And this is your job as a trader to decide when the MRI within a candle is more relevant than others. Here, you can already see us going down for 2 quarters. So obviously, you are taking this MRI top more seriously in the beginning. This starts, raging up. So obviously, you should be taking this MRI top more seriously near the end. This never even went down. And right now, we are just getting started, boys. We are just getting started. Though not necessarily. 1, 2, 3, 4, 5, 6, 7. We got 2 more quarters. 2 more quarters until another MRI top. And that could actually coincide very well. No, it won't, because then we need 3 quarters. It's possible that the second consecutive MRI monthly top would coincide with the quarterly MRI. That would be very interesting, because if I put display trend numbers on this chart, oh, we did reset. Oh, no way. I didn't think this candle reset, but it did right there. We did reset. Interesting. What about the Heikin-Ashi version? The Heikin-Ashi version also reset. So both of them reset. Ooh, that's interesting. That is interesting. If this thing did not reset, it would be right now, we would be on a 7 with 2 quarters to go. And that last quarter, that is the MRI top quarter, the quarter after could coincide with a monthly MRI top, the next one, because we'll need 9 more months. Man, that could be interesting. All right, something to keep an eye on for the future. Definitely. Let's go to the weekly chart. We just flipped over the week. The week has just begun 2 hours ago. So 2 hours ago, we started a brand new week. And here's the good news. Or there's multiple pieces of good news. The good news is that we did have a bullish candle to close this week. This week closed on a bullish candle. The shadow at the top and the bottom are not bigger than the body, and the body was very, very bullish. You had the green star, which told me this is what I went in. I went like pretty much all in with my retirement account on Bitcoin right at the breakout at 19.5. And I took a little bit, I took 25% off the table, and I kind of wish I took more off the table on Thursday, but I may get lucky. And, well, not Thursday, actually. I wish I took it on Monday, which is where I was supposed to take it, but I missed it. Monday, Tuesday, I had my shots at it, but I missed it. It's possible that next week I can get even better exits, but it doesn't, just because I can get out of GBTC at a higher price next week or this week, doesn't mean it was the right move. The right move was to sell at a 40% premium. That was the smart trade. There is a difference between being lucky and being a good trader. So I made a mistake. I did not sell more. I only sold 25%. I should have sold more. I should have sold 50 to 75%. So I made a big mistake not exiting on a 40% GBTC premium. Okay. Big mistake. Now, I may get lucky, and GBTC tomorrow opens at 32. GBTC had a high of 32, but there's no way I was going to get that number. But tomorrow, GBTC can open above 32, which means that I would have made, because there's a high chance I would not have bought back in on Thursday at these lows. The main reason why I wouldn't have bought it on Thursday, one, because I know I was very busy that Thursday, and two, I forgot that I was traveling. It was a travel day, and I forgot that the market was going to be closed on Christmas Day on Friday. So I probably would not have gotten back in. But if I was a more, if I paid attention to my own trading better, I probably would have considered getting back in, but there's a high probability I would not have either. So I may get lucky, but that doesn't mean it was a good trade. But it's definitely made me money because I got in back here. I got in before this pop. So I was able to get in over here at 22. So definitely not as good, but tomorrow it should be looking good, especially since we're rising right now as we speak. Look at the 4-hour chart. I skipped the daily altogether. Let's go back to the weekly. Let's talk about more good on the weekly scale. We are on a 5 into the MRI top. So this has all the signs of a second consecutive MRI top. Now, that doesn't mean we can't pull back. We can still pull back to 21,000 and still make a new MRI top 4 weeks from now. Both things are possible. We have so much room to the downside. This week and even next week, we can fall all the way to 21 and maintain the MRI count. Now, this is the 5th candle of the MRI count. And the 5th candle is really important because in order to make an MRI top, it measures it against the 5th candle. So the higher this closes, the harder it will be to create an MRI top. The lower this closes, the easier it'll be to make an MRI top. And I am looking for that second consecutive weekly MRI top. And this is why I will not get out with all of my GBTC no matter what, because I am bullish on a weekly level. At this point, I would probably get out another 25%, but I doubt I would get out more than half of my position because I think the GBTC premium sell-off has played out. And I think the GBTC premium is only going to go up next week due to the price being so high, and there'll be a FOMO into GBTC. Now, anything on the oscillator front that's interesting? Not really. They're all fully bullish. Nothing interesting. We are getting a little bit overextended, but I love the fact how the moving averages are rising. It's really important for the 200-week moving average to rise as much as possible because that is your eventual floor. When the bear market comes, and the bear market will come, it's like winter is coming. Winter eventually shows up. When winter gets here, we will touch the 200-week moving average one more time. So the higher the 200-week moving average is, the happier everyone is. So ideally, you want that 200-week moving average to be above $20,000 by the time winter is coming. So the more this goes up, the better it is for the 200-week moving average. Ideally, you want to start knocking out these weeks, which I believe we already have. Let me just draw this backwards. If I hold the shift key and I go back 200 weeks. Oh boy. Oh boy, that's a lot. That's only 143. We got a long way to go. Wow. Okay. A long way to go. So we're not going to be knocking out these lows anytime soon. We're still stuck with those lows. Didn't realize how far back 200 weeks takes me. Let's try this again. That's only 162. Oh my God. That's only 187. So we got to go all the way. Jeez. How far do we have to go? Let's try this. Wow. I did not realize how far back we were. Oh, and I can't click on that. I'm too far. Yeah. Huh. Still too far. All right. I guess I got to do it this way. All right. Let's try this again. 200 bars. 210, 25, 23, 200 bars. So we are still using $1,000 bars right here. This bar closed under $1,000. So we are still factoring in all of these candles. So that's huge. This thing is about to accelerate really, really quickly because we are now replacing candles that are worth $1,000 with candles that are worth $27,000. That's a big deal. So this 200-week moving average is really about to start rising quickly because we're knocking these off the calculation. So it's really, really good. Once we knock all of these out and the lowest candle goes back to 3,000, then this thing is kind of set and then it can level off a little bit. But right now, this thing is rising really, really quickly. Really quickly. Any thoughts on a 3-year bull market to take us to a yearly MRI top? I can't see a 3-year bull market. We are rising really, really quickly. And I think we will top out either in 2021 or 2022. I think it will be a double bubble, one in 2021, and then pull us back maybe 40, 50%, or 60%, and then quickly recover and do it again into 2022. And then that bear market is going to be a little more extended into the next halving. I just think we're rising too fast. But I do think that in 2021, 100K is now a serious reality. 100K in 2021. What am I saying? 2022. 100K in 2021 has become a serious reality. Okay, daily chart. That's a very nasty candle on a daily chart. However, the current candle is very encouraging. This is only a nasty candle if it confirms on the following candle by going lower than the low of this shooting star candle. This to me is still a shooting star. The tail at the bottom is very, very small compared to the big tail at the top. Normally, this is a very scary candle, but the way what we've done in the last 2 hours is very encouraging. Now, if this candle closes as a bullish candle, I will then be looking for the daily to continue into its MRI top right before New Year's. So this gives me encouragement that next week we can break the high. We can break the high next week. And next week started 2 hours ago. So this week, we can certainly break the high. We can even do it by morning. But I'm not expecting us to break the high by morning. But I am, as of right now, by looking at this candle, even though it's only 2 hours old, right now I am encouraged that this high will be broken. I'm going to trust my TA. I'm going to trust the MRI count to take us into yet another daily MRI top. Even though that is a scary candle. What do I think the chances are that we go below 19.5 for more than 2 days in a row? Oh boy, I think those chances are about 45%. I think that based on the current economic situation, especially in the US, and the political situation, especially in the US, based on those factors, I am starting to, lean on the side of Willy Woo and say sub 20,000 has become less likely than likely. Trump has signed a $900 billion corona relief bill. So 600 to each person and 700 billion to special interests all over the world. Good job, Trump. That was dumb. Okay. The 4-hour chart. Look at the 4-hour chart. Look at the beautiful second consecutive MRI top on a 4-hour chart. See, this green star candle was absolutely perfect. This is where I love buying the breakout. I mean, this line should be green. I'm sure I talked about it in the past. And the moment this line is breaking, I am incredibly bullish because this multiple things are happening right here. We had the MRI top with an extension B top. That tells me that you should get out with a profit because also the MRI got you nicely into the trade as well, right here with a warning sign. We also broke out of a channel right there. What a beautiful channel break. Okay. I can adjust this channel a little bit. I probably should. I haven't looked at it in a while. Okay. So if I adjust this channel in hindsight, I would take that to the top. I would take that to the top or higher. That's a very clean channel right there. That's my adjusted channel. And you can see the breakout of this channel. I love buying breakouts of channels. And as that channel broke out, I know it's all hindsight. And here's another one that was a beautiful breakout. Absolutely beautiful. See, same thing. Here's your MRI top. And here's your green star 2 candles later above the breakout consolidation. Beautiful trade. But now we can go ahead and put arrows to this. So here's the channel. So I'm going to go from the top. That is 17% for $4,200. So now let's flip it. 17% for $4,200 at channel break. Did we hit our target? We broke we perfectly hit our target. There it is. 4,200, 17%, right there. And look, we could not even close above it. Perfect target hit off the consolidation of the channel. And now, if you look at these candles, you got a warning with, so here, let me do replay mode. This is the 4-hour chart. I actually like the 4-hour chart. If we put this in replay mode, put it right there. Okay. I should have gone 1 candle back. But in any case, let the MRI load. So this can get you back into the bullish trade. You are on a 4 of the MRI. And here we go. Oh, this one. There's your 4-hour candle. Bullish candle, 4 hours. Okay, keep going. There's another candle, bullish candle. Boom. Huge bullish candle. Down arrow, extension C, throwing you a little bit of a warning. And now look at the next candle. Shows up. Perfect doji. Textbook doji, boom, MRI top warning. This tells you to get out. Potentially. It's an MRI warning. It's an indecision candle. Huge volatility. This is 3 o'clock in the morning, of course. So you Americans are sleeping. 3 o'clock New York, midnight California. Everything is closed in the Communist Republic of California. So it's not like there's anything to do there at midnight. And there you go. Warning sign. Next candle. Bam. MRI. Top. Second consecutive. Big drop early. Breaks the bottom of the doji. Pulls back. But look at the next candle. Took you back down again. And here we are now. And this is a very encouraging candle, but it's not enough. We need to break the high. we need a new high close. So here's your next critical line. You have to close a 4-hour candle above that line. Ideally, well, in order to get there, you would break the current candle's high, which is another bullish sign. If we can break above this candle's high, I would be fairly confident we can close above that green line. Okay, let's go to the hourly chart. Let's see if the hourly could have timed us even better on the exit, because I haven't even seen these charts. I've been traveling all day. Wait for the MRI. And the MRI did not really help. There was an extension B here. I mean, it wouldn't signal much to me. This was a 7 candle. We were off by a candle or two. I would have still been bullish, but the 4-hour chart would have gotten me out. Now, this line has to move up a bit. And look, here is your resistance line off the MRI. Beautiful buying opportunity right here. Now, that is a crappy candle. I would never buy this candle, but look at the next candle. The next candle is a hammer candle. Love the hammer candle as much as I love the shooting star candle. And the moment the following candle breaks above it, that is a bullish trade. This is the kind of stuff that I teach in my technical analysis workshop, which is still on the Black Friday sale. It'll stay on the Black Friday sale for most of January, guys. But after that, going into February, prices will rise and my private Zoom subscriptions will begin. I will keep these videos to 15 minutes, and then we would be spending time in a private Zoom, not every session, but at least a couple of times a week. Okay, and now it's back to the daily chart. And that's it. So I already mentioned GBTC. Let's look at traditional markets because they're open. And I do want to take a look at the CME futures on Bitcoin and see how big that gap is. I love the fact that we have gone above the opening of the year Bitcoin dominance, and that's great. So let's see how high we can go. Gold is rallying. I've been bullish on gold ever since we broke the prior swing high. We've established a higher low. We've now established a third higher low. We now have a nice steep trend line we can draw. We have 3 points. That is very, very good. And the next hurdle is the 2011 all-time high. S&P is breaking out as well. I now move this line up here. The break of this line and a close above that line makes me very bullish going into the future. But this is not the time to invest. It's the holiday season, and it's also who knows what's going to happen with the election and stuff and who's going to be president. I still think that it's not over. There's a chance. Trump has a 5% chance. Now look at this. The weekly is going to be on an MRI top weekly this week. This is last week's candle. This week's candle is coming. And that's a sign to get out of the market for year end. Let's look at BC1. Oh, maybe it's not BC1. What is Bitcoin on the CME exchange? Okay. How's the ticker? Maybe it's BC explanation point? Hey guys, what's the ticker? There, oh, BTC, got it. Found it. Wow, look at that. Look at that gap. Look at that. It's and it was happening. Oh, I didn't even know that. There was a daily MRI sell on December 24th. Like I said, the smart move would have been to get out of GBTC. Not completely. But the smart move would have been to get out right here going into the holiday. Now, just because it gapped up and you got lucky, that doesn't mean that was the right choice. Yeah, I can't trade the CME future. I trade my retirement accounts, and I'm not allowed to trade the futures. So I trade GBTC. And this was a beautiful top, 3 with an extension B. Took you down a bit. Didn't last long. 1 to 4 candle correction, then back up. But that's a huge breakout right there. And I'm really curious where the GBTC premium will be. We got some questions. Let's see what you guys got. Hey, Tone, looking at the parabolic move to 30,000, do you think Bitcoin moved too quickly? That there is downside risk, like you mentioned, to 14,000 is on the cards. So, yes, Bitcoin moved a little too quickly, but I'm not seeing 14,000 right now. And the main reason why I'm not seeing 14,000 right now is because if we compare the daily chart, let me drop all of the annotations and make it cleaner. See, if we compare the daily chart, the last time we went up this fast was back in early 2019. The first half of 2019 is equivalent to the latter half. Like, to me, these are the same. So if I take this line and I do this from April, oh crap. I guess, you know what? Let's do it start to finish. That's the steepness of the line. And if I just take this line with the same angle and I move it over to here, you can see how we're even steeper. We are even steeper than before. And it's approximately the same length in months. So that was April to June, April, May, June, July, April, May, June, sorry, 3 months. And this is October, November, December, 3 months. It's a very, very similar line. But look at the big difference. Look how bullish people are today versus how bullish they were back then. You see this area right there? That's the big difference. Let me zoom in on that. That's the big difference. And this just happened like today. So we only had 1 day of this. So I can even drop this line. Do you see how much more bullish? Do you see how out of control these markets were back then versus now? Now it's starting to be concerning. Look at these spikes the last couple of days on the funding rate. This is where it starts to get concerning. Now, I just need a few more days. I want to see us get to that 29,000, and I might be selling a significant chunk. I would love to see the GBTC premium spike above 40 to make up for my stupidity of not getting out on Monday and Tuesday, which is where I should have gone. I mean, like I said, I got out 25%, but I should have got out 75%. If we open on Monday with a 45% premium, this thing could open at like $40, which is great because I'm going to take my profit. Monday or Tuesday, I'm planning on it because I'm looking at this GBTC funding rate, sorry, the Bitcoin funding rate. And I know the exchange I'm using is not that popular anymore, and I need a better metric. And I think my developer is going to come back next year because he had, my developer took a break. And this is like, once this goes above these two, I'm concerned. So there is I'm not going to use the peak, but right there. Above this line has been trouble. Above this line has historically been trouble. And as you can see, we're pushing that boundary right now. So this was August, and this was February. And of course, these were May, June, and August again. So let's go back. So let's see the last time we were here and we had like a 3-month pullback. Didn't go down far in price, but it was very long in time. Prior to that, we had the February top, which coincided with COVID crash. And prior to that, we had this secondary top to 12,000 in August, the primary top in June, and the right here in May when we hit the second consecutive MRI top, and then we had a multi-month or like a 1-month pullback. So I do want to get out. I will be kind of pissed if we do not break $32 on GBTC, but I am going to be getting out. I don't like this. I don't like that premium. I'm not comfortable with this. Okay? I'm not comfortable with that. YouTube likes to shadow ban me. It's not always easy to find me. Tone, please take a look at the Baltic Dry Index. I always have BDI on TradingView. Really? They finally added it? I always had trouble with that. Let's see. BDI. Baltic Dry Index. Beautiful. Need the weekly chart. So here's your Baltic Dry Index. It's looking good. I don't understand why it's looking good, but it's looking good. For those that don't know what the Baltic Dry Index is, it's shipping. I don't know why they call it dry, but it's like shipping across the ocean. Beautiful buy opportunity right there. Oh, what a beautiful candle. Look at that. That is a second consecutive MRI buy along with extension C ending right into an MRI sell. Another beautiful MRI buy, a beautiful MRI sell. Jesus, a beautiful MRI buy, double consecutive MRI sell. You can't actually trade this thing, but wow, look at that. Buy wasn't great. Sell was perfect. Buy was perfect. And we must have just missed it here. Sell was okay. Buy was not great. Beautiful buy right there. And we haven't had anything since. This is a bullish-ish looking chart. I don't know what the hell they're shipping or where it's going in this shutdown, but that's interesting. Okay, next, what are the questions you have? Can you please ask Tone if there is still an inverse correlation between Bitcoin and alts, despite most shitcoiners trading alts against USDT? And if so, should we monitor? Look, guys, there's going to be an exodus out of shitcoins. Shitcoins are bad. Look at B-Trash. It is going to make another new low. I can't wait for this thing to be below 0.01. Once it's below 0.01, I will completely ignore it going forward. I will start calling it Fcash, and it's done. Right now, it's still Dcash. Look, I don't know. Look, can shitcoins pump? Yes, but over time, they trend down, and Bitcoin trends up. That's all you need to know. Tone, do you think the SEC will go after stable coins? No, the SEC can't go after stable coins because stable coins are not securities. We went over this 2 days ago on the Christmas show that the SEC does not have jurisdiction over stable coins. The FinCEN can go after them. Maybe CFTC, but not the SEC. Now, I'm sure by the SEC you meant, can the government go after stable coins? And the answer is yes, they can. And they're already going after Tether. And let's see what happens in that case. But yes, absolutely. The government can go after stable coins, but it's not going to be the SEC. That's a good question. Why aren't you trading GBTC around a core position. Based on your trading, you'd have GBTC at sub $10. Because I was an idiot back then, we're talking sub $10 because I didn't see the value in GBTC until Tyler Jenks convinced me otherwise. So I didn't actually start trading GBTC until more recently. And I use GBTC for trading, not as a core position. I should have held Tesla all year and not Bitcoin. I would have made more money. And Zoom too. Though I would have gotten out of Zoom. Speaking of Zoom, man, did the MRI call Zoom perfectly. Look at that. Look at that. Beautiful. That's a weekly. Look at the daily. Look at the daily MRI top right there with an extension C in line with the weekly MRI top on Zoom. And I can't wait to see where Zoom opens, because to me, this looks like Zoom is ready to go down more. But Zoom's already down like probably 30%, 36%. And the MRI called it absolutely perfectly. Absolutely perfectly. Meanwhile, the MRI called Costco. So while Zoom is set to drop, the MRI called Costco as a perfect buy on Thursday. So I'm really curious what Costco does going into next week and end of year. And on a weekly scale, Costco looks bad. But on a daily scale, the MRI is right there. Yeah, the MRI has been given a yearly signal on the Dow Jones and the S&P. If we go to the yearly scale, this was a crazy year. I don't know how useful the MRI is on a yearly chart, but we were definitely watching the MRI going into this year. And if you got out early in the year due to MRI, you definitely avoided the big crash during COVID. So the MRI did its job early in the year, but obviously this is a very bullish year. The chart that's more interesting to me is actually the 6-month chart, not the yearly chart. So looking at the 6-month chart, you can see how the MRI, this was a 4th consecutive top at the .com on the 6-month chart, and then it perfectly called the financial bubble top as well. Now, this was a decent top right here. This was 2014 top on a 6-month chart of the MRI. And look, there was a 1, 2, 3 candle correction, because each of these candles, well, this one was a doji candle, but this candle broke the lows of the prior year. And the next candle broke the lows of the prior 1, 2, 3, 4 periods, which is 2 years. So we made a 2-year low on that candle. So this MRI top certainly did its job. And then we had a green star candle. I love that. This is my perfect trade, guys. This is my perfect trade. You saw it before already today several times. The breakout above consolidation after a first MRI top, or a second, but ideally the first MRI top, is my perfect trade, because this also activates the extensions. We already completed extension C, and we can complete extension A next candle, and extension B still has a few more candles to go. And right here, we have another green star right now. So on a 6-month scale, this thing is going into a 3rd consecutive MRI top. And you can see the last secular bull market we had 4 consecutive MRI tops. And then we had the big, the big 40% correction. I mean, it was 40% in 50% in the S&P. It was like 80% in the NASDAQ, 50% in the S&P. So at this point, I am going to trust this green star, because this candle is going to end in a few days and nothing's catastrophic is going to happen. And then I'll be looking for multiple years of upside here, like through the next presidency, no matter who it is. And but this time it could be driven by inflation. This time it could be, but not even inflation. It'll be driven by the loss of confidence in government assets, like the government currency, which is US dollar, and government bonds. And all that money is going to flow into stocks. And while this is not a great example of my perfect trade, I would have loved for this green line to break. I would have loved for these two candles to be under the green line, and then this star candle breaking above this green line. So that would have been my perfect trade. So this one wasn't. But I really like the 6-month chart. Whoa, now questions are coming in. And the Dow is going to look very, very similar, I'm sure. I'm pretty sure. How is the monthly chart looking on the S&P? The monthly chart is looking very bullish. Why consider Costco? Isn't that a missed opportunity if GBTC grows at a faster rate? Well, sure. But look, there is opportunities everywhere. You know, right now I'm only trading GBTC, but other people trade other stuff. Costco could be a good trade. I mean, there's leverage you can use if you're an options trader. You know, it depends on how confident you are with the trade. See, right now, had I saw this, look, if my job was actually to trade and not to, evangelize Bitcoin, I could have put a very leveraged trade down on Costco last week. I probably wouldn't because of the holidays, but in a different calendar week, like not last week or this upcoming week, I would be very interested in going long off of this candle in the beginning of that candle. And I can leverage this pretty damn well with options. Okay. Now, if you're going to trade options, please know what you're doing. My course is still at a discount. And because right now, on that Thursday, remember what I should have done. I should have exited my Bitcoin Monday or Tuesday, which means I should have had a shit ton of cash in my account Wednesday and Thursday. And look what's happening on Thursday. Now, I know that MRI is coming because if I was paying attention to Costco, this would have a yellow arrow with a warning sign saying, hey, you may want to keep an eye on the next day. So I could be, since I'm exiting GBTC and I have all this cash, I might leverage in for a 1 to 4 candle correction to the upside in Costco, and I can take that high leverage trade if you know what you're doing with leverage. I don't want to encourage leverage trading. But if my money is just going to sit there, now it turns out that I'll get lucky with GBTC and I'll get to exit, hopefully above $32 so I don't feel like an idiot. But I'm going to consider that luck that worked out in my favor because 90% of the time, luck usually goes against you. So there's nothing wrong with trading other assets if you see good opportunities. Tone, can you please take a look at Tesla and the RSI? Well, we don't need to look at the RSI. I can tell you what the RSI is without even looking at it. The RSI is overbought. Here's Tesla on daily. Here's Tesla on weekly. There's no reason to look at the RSI. It's going to be ridiculously high. It's going to be in the overbought territory. I don't even have the RSI here. Yeah. So the RSI is still clean. As long as the RSI is above 70, there's no reason to panic. So the RSI isn't very useful. Tesla's still bullish. Let's see where it opens. Oh, Trump vetoed the bill. Okay, that makes more sense. Good. I thought I guess I must have misread it. Because I just said Trump is stupid for signing it. Good. Good for Trump. All right, I need to call it a night. Remember, in the future, these videos are going to be 15 minutes, not 50 minutes like this one is. Yeah, so I'm ready to call it a night. I just want to point out once again that those that are calling me grandma killer, you're wrong. The latest medical study is showing that there is only a 0.7% chance of infecting someone else if you are asymptomatic. Asymptomatic is the new demonized word for healthy, like me as I travel around without any symptoms. So if you don't have any symptoms, your probability of infecting someone is 0.7%. And that's inside your own household. That's not even on the street. So the mask people are insane. Okay. So there you go. So anyone says that you're asymptomatic and you're a grandma killer, point them to this study. I tweeted it out. Check it out. Here it is in the medical journal. You can click on it and you can take a look. Okay. Look at it yourself. There it is. See, it's, I wish Jenny would have posted the link to the study. Report, University of Florida researchers have found no asymptomatic or pre-symptomatic spread of COVID. So there you go. Something a lot of us figured out around June, that the masks should not be worn. Or at least they make they only make things worse. JMIA. All right, last one. I'll look at JMIA and then I'll call it a day. Looks bullish. Shooting star candle. Let's see where it opens. Still room on the MRI. A little bit more, probably 2 more candles. So the candle coming up tomorrow. Oh, it's a weekly chart. Sorry, weekly candle. 2 more weeks, so you'll probably get an orange arrow right there. We can take a look exactly if you like. Nope, 3 more weeks. And what about the daily? Daily looks good. See, again, you have your MRI top, 1 to 4 candle correction, classic, back into the uptrend. Not a great uptrend, but certainly an uptrend. Now you have an MRI top consolidation. Yes, that's an extension C ending from the MRI top back here, but now you have another green star candle. You could potentially starting another bull run. I am leaning bullish here, but if this week starts trading below last week, I will no longer be bullish. So I'm bullish until that point. So did Trump sign the bill or he vetoed the bill? Can you guys get this shit straight, or do I have to Google it? Like, half the people are saying he signed it and half the people are saying he vetoed it. You know they're the opposites of each other, right, guys? He vetoed the defense bill and signed the stimulus bill. What was in the defense bill? I don't know. I don't give a shit anymore. You know, like, I'll be at the rally. I'll be at the rally, guys, by the way. Rented a big Airbnb with a friend. Not sure who else is going to be staying there, but I will be at the rally in DC on the 6th. And if Trump is not elected, if Trump doesn't find a way to remain president without, martial law and army hurting civilians, that's all I really care about. Like, I don't really, no, that would be insensitive and I'll get my channel banned. So there is a different, okay, so let me say this in the most politically correct way possible, not to get my channel banned. To me, there's 2 types of people. There are private citizens and public servants. I am very against the use of force and military against private citizens. So if Trump somehow stays in office without hurting any civilians or private citizens, I would be happy. And if Trump doesn't do that and Biden is president, which is the more likely scenario, I will stop giving a shit about politics. Amongst all the other things I don't give a shit about, but I will be explaining why the US dollar is now in serious trouble of hyperinflation for the first time in my life, by the way. I don't think I'll be around the US by 2024 because if Biden is president, I will I will find a way not to be in this country. I'm probably out, and that's I mean, my parents would be really pissed, really pissed, like disowning tone pissed. But a Biden presidency would make me. I mean, I would have no confidence in the U.S. political system or economic system. So why would I live here? All right, I'm looking at your live chat, guys, before we sign off. I would not feel comfortable living in the U.S. under a Biden presidency. I would not feel comfortable. I don't know if I want to go to New Zealand. All right. I think that's it. Guys, support. You have the videos. I got to decide. I think I'm going to make this video free. Constructing the perfect portfolio. Once I figure out how to log into the Hyperwave YouTube channel, because Leah gave me, I got the credentials from Leah like a year ago, and I logged in, and I think I changed the password, but I forgot what I changed the password to, and I'm not exactly Tyler Jenks. So if I can find a way to log into the Hyperwave YouTube channel, I will make this $200 video free. I also dropped the prices for Black Friday on Tyler Jenks's work. This will become free, and we'll make, every year we'll make one of these things free. So we got a few years to go before everything is publicly available and is free. Maybe I'll do it like every 6 months. I don't know. We'll see. Okay. Portugal, Portugal was on my 2020 list. I had 4 must-see countries for 2020, and I didn't see any of them. Well, I saw South Africa. There were 5. I got 1 out of the way. I had 5 countries I needed to see in 2020. I made it to 1. I made it to South Africa. The others were Portugal, Japan, Peru, and Brazil. And I didn't make it to the other 4. So I've never been to Portugal. Okay, that's it. If you're looking for the MRI, that would be right there under products and services MRI. And of course, you can always support with the affiliate page. I still have the buy the dip. The website should still be up. Not my website, but the lovely Barbie Buys Dips. That's not her. But nope, that's me. That's her. That is her. That is the owner of the buythedip.store. So you can support that as well. One of my favorite shirts. I believe that is also her. And that is definitely her. So that is the owner of the buythedip.store. So if you're looking for the Buy the Dip brand, this is the one that I wear. Check these out. All right. I have my own store, which I never promote. There's my store. Okay. We're going to try to get the conference back. You know, I will only do the conference if there is no mask mandate. If there is a mask mandate, this is not happening. This will only happen under a no mask mandate. Now, I'm not going to force you not to wear a mask. You can wear a mask as long as I don't have to force you to wear a mask. That's kind of the libertarian way. All right, guys, that's it for me. We've got past an hour. I have no intention of doing that. Thank you all so much for watching, and I will see you all on the next one.